This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
European Union countries' ambassadors on Wednesday greenlit the bloc's plan to phase out Russian gas imports by late 2027, a spokesperson for Denmark's EU presidency said, clearing one of the final legal hurdles before the ban can pass into law. The EU struck a deal last week on a law to cut ties with Europe's former top gas supplier Russia, having vowed to do so after Moscow's 2022 full-scale invasion of Ukraine. Under the agreement, the EU will halt Russian liquefied natural gas imports by the end of 2026 and pipeline gas by the end of September 2027.
U.S. crude oil stockpiles were expected to have fallen last week, while distillate and gasoline inventories likely rose, an extended Reuters poll showed on Tuesday. 8 analysts polled by Reuters ahead of weekly inventory data estimated on average that crude inventories fell by about 2.3 million barrels in the week to December 5. Crude inventories rose by 574,000 barrels to 427.5 million barrels in the week ended November 28, the AIA said, compared with analysts' expectations in a Reuters poll for an 821,000 barrel draw.
Moving on to the top news in the energy sector.
The European Union is set to slash permit wait times and introduce top-down planning of electricity grid infrastructure across Europe, as it scrambles to curb high energy prices that industry executives have warned make Europe uncompetitive. Industrial energy prices in Europe are more than double those in the United States and China. Domestic energy-intensive manufacturers say they deter investments in the continent. The European Commission on Wednesday published legal proposals to slash deadlines for authorities across the EU to approve permits for energy projects, in a bid to speed up the modernization of power networks, confirming draft plans previously reported by Reuters.
The Trump administration will hold the government's first sale of oil and gas drilling rights in the Gulf of Mexico since 2023 on Wednesday, a key test of industry appetite for offshore acreage at a time when the United States is seeking to unleash more domestic fossil fuel production. The auction is the first of 30 mandated by U.S. President Donald Trump's tax cut and spending bill, which he signed into law in July. His administration's plans for offshore leasing are a significant departure from that of his predecessor, President Joe Biden, which had planned for a historically small number of oil and gas auctions as part of an effort to move away from fossil fuels and address climate change. The U.S. Bureau of Ocean Energy Management offered 81.2 million acres in the Gulf at a royalty rate of 12.5%, the lowest permitted by Trump's new tax law. Next, we have the top news in metal markets. Gold prices edged down on Wednesday as investors awaited an expected interest rate cut by the U.S. Federal Reserve and clues on its future policy, while silver extended its rally to new highs. Spot gold was down 0.3% to $4,197.91 per ounce at 12:43 GMT. U.S. gold futures for February delivery inched 0.2% lower to $4,226.40 per ounce. Meanwhile, spot silver rose 0.6% to $61 per oz after hitting an all-time high of $61.61 earlier in the session, driven by rising industrial demand, declining inventories, and its designation as a critical mineral by the United States. The white metal has risen 112% so far this year.
Copper prices rebounded on Wednesday, moving back towards record levels, on hopes for more stimulus in top metals consumer China, especially for its battered property sector. Benchmark 3-month copper on the London Metal Exchange gained 1.2% to $11,626 a metric ton in official open outcry trading after easing by 1.3% on Tuesday and having hit a record peak of $11,771 a day earlier. Shares in China's property sector surged on Wednesday amid market rumors that the government was planning a 400 billion yuan, $56.63 billion, government mortgage subsidy package.
We will now look at the top news in the agricultural sector.
Malaysia's palm oil production is on track to exceed 20 million metric tons this year for the first time, supported by more efficient harvesting, improved labor availability and output from maturing plantations, the industry regulator told Reuters. Record production in the world's second-largest palm oil exporting country is likely to lift inventories, which could weigh on benchmark Malaysian futures, already trading near a 5-month low. Malaysia is expected to produce between 20 million and 20.5 million tons this year, assuming favorable weather and continued harvesting efficiency, Ahmad Parvez Gulam Kadir, Director General at the Malaysian Palm Oil Board, said on Wednesday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.